Sorry if it's already live. I'm sitting there reading the directions, although I don't think anybody's joined yet, so it's no big deal. But as soon as I hit live, this thing popped out giving me some suggestions about it. I'll read it. Moderation helps everyone feel safe. To build a positive live chat experience for you and your viewers, choose who can participate. Well, anyone can participate. And everyone's been really polite, even those who have different opinions. So at least for now, nobody's getting blocked. Set a delay between messages. I'm not sure what value that would add. I'm hoping to read the messages if anybody shows up and chat with people. Hide or put people in timeout. Can they sit in the corner and wear a little hat for timeout as well? Um, Manage messages held for review. Add moderators to help to add moderators to your channel. Okay, well, we'll close that out, see if it says anything else. Hope you're all doing well. Nobody's joined yet. I was a little impetuous. I haven't done live before, and I won't for a while as well, even after this one, because basically, I'm going out of town for a while. So I'm not sure how to do it. I'm not even sure where I see the chat. So I see a couple people have started to join. Let me see if I click here. Sorry, I'm new to chat and the whole thing. Anyway. Oh, okay. Hi, Billy. Oh, nice to see you. Anyway, I got a little impetuous this morning. I was anxious to try live out. I don't really have any agenda or anything planned. I'm not sure what I'm going to talk about. I really just figured I'd test it out. I'm going out of town for a little while. I'm not sure when I'll be able to do it again. But when I get back in about a month and a half, I may start doing it once a week. And my real thought is probably on Sundays if I can stick to it. I'm not the best at being organized and disciplined like that because my schedule is always changing. And part of why I did YouTube is I don't want to say I'm retired. I'm not really retired, but I have a lot of freedom and I spend a lot of time with family and I tend to have things come up or things change throughout the week. So I hope everybody had a good week this week trading. I hope their accounts did well. Friday was a little bit crazy. It had a nice close at the end of the day. I hope everybody sees the economy the way I do, but obviously everybody has a difference of opinion. My thought is things are better than everybody thinks. Inflation sucks for all of us, which I know I've talked about a bit. Nobody likes it, but the reality is a little bit of inflation is actually a good thing for companies and life and everything else. It just makes it harder to keep up. And I think for 20 or 25 years we were so spoiled with no inflation, that now that it's come back, it really is more normal. And a lot of people never really dealt with inflation. So now that they have to deal with it, it's a bit of a shock to the system. Um, so anyway, let me know like, did anybody buy any stocks? Did anybody sell any stocks? Do you have opinions or questions you want to ask? Whoop, I lost a whole bunch of people. Looks like it's just you and me, Billy, at least if the thing is correct. Um, I bought a little bit more Boeing. What else did I buy? I bought a little bit more UPS this week. I actually bought a little bit of Costco. I had bought a little recently. I said it in a couple of my videos, and really, um, I want to thank everybody for this because it's caused me to be more disciplined with my own trading. As much as I talk about a lot of it, I tend to be pretty emotional and I'll buy the highs and I'll sell the lows, as well as what I say not to do. And the reality is you want to buy and own and hold for a long time. And the more that I've been doing the channel and the more that I've been talking about it, it's kind of a reminder to myself that, you know, be patient, sit, wait things out, give it time. So I've been better with my own account in terms of just sitting and not selling and not getting worried when the markets go down, not stressing about it, and sticking with the positions. And then the other thing that I've been better about sticking with is like a company like Costco that I think is overpriced. Well, it's still a great company. It's one of the best out there. It's a company I want to own in my portfolio. So I just kind of sucked it up. I bought a little bit, and maybe it has a huge pullback at some point. I think it's super overvalued, and I hate that about it. But Costco is a company I wanted to own, and again, by having the channel and reminding myself that there's just certain companies you want to own, I took my own advice and I bought a little bit of Costco, and then after they had the earnings, a tiny, I think I paid 7.99 or 7.98 when it got below 800, and I bought a little bit more. Um, yeah, yeah, sorry, Billy. Yeah, I just saw your comment. Yeah, UPS did hit its lows for the year. Um, the reason I picked it up is a reason I don't always suggest is I started getting attracted to the yield and the dividend. It's getting close to a 5% dividend at this point, which to me for a company like UPS, it's great in logistics and been around a long time. I don't really see them going anywhere. That's really good return. The one thing I didn't like is they announced that they're going to issue new debt. So that kind of bothered me, especially with rates as high as they are. I'm not really sure what they need to raise the debt for. I would hate to think they're going to raise the debt to continue to pay the dividend. I think that's a huge mistake when companies do that. But maybe they need to upgrade their vehicles or something else. And the estimates, like they didn't reply, so we don't know how much debt, but the guess is somewhere around 2.5 billion, which at least to me was a pretty large number. That was what pushed the stock a little bit lower towards like it had kind of made a low and seemed like it was bottoming out, and then the next thing I saw, it started to drop again. And when I read the news on it, it was because they were issuing debt. Again, I didn't really love that they're issuing debt. I'd be curious what they're using it for. Um, but I think as a long-term company, I see them having more competition with Amazon and maybe even Walmart will start doing their own deliveries or some others. I know Target just got into the space. Like they did that new red circle thing, and they're going to start doing. I think they already have. Within 2 hours, they'll deliver products to your house as well. And I think it's to compete with Amazon. But maybe that helps a company like UPS and FedEx, but maybe not. Um, but again, I know myself included, I got attracted for the wrong reason, which is the yield. But I also thought the price had finally gotten to a level that I was happy with. Excuse me, I'm going to have a little bit of my coffee. So I don't know how many people get up this early. I tend to wake up at like 4:30 or 5 in the morning, and it's kind of my time to go over my portfolio, look at things, make my decisions, what I do want to look at for the week, what I'm going to pay attention to. My family generally sleeps much later, so I try to keep it down a bit and not wake them up too much. Um, Anybody buy anything this week? Anybody have questions? I see there's a few more people joining. It's kind of cool. Like I said, this was totally impetuous. I was more anxious and not sure if I was even going to do a video today, and thought, oh, I'll click on the live and see if anybody even comes in. Um, the stocks I watched this week, like I saw CRM got beat up pretty good. The problem for me with CRM is not only is it not a stock that I really pay close attention to, I'm well aware of it because we use it for our work in our company, but I don't really, there might be aspects of the company that I'm missing because I don't really see the value because there's so many competitors at this point and there's so many different companies you can go to for the same type of service. And I think in the long run, even like Microsoft or something like that will be able to handle most of what CRM does. And what I've noticed is most of the the customer retention programs, like they start making them harder and harder to understand. And I think it's on purpose to get you stuck with the one that you're using, if that makes sense. Like, I signed up for this one called Jungo, and it started out just fine. It was really easy to use, and then they started doing all these add-ons to make it more and more difficult, and it got more and more annoying. And when I thought about it, I kind of wondered if that was on purpose because it makes it harder to switch to somewhere else. I don't know if that's their business model or what they do, but I'm not sure what they really offer as a service. And I don't know that I see a huge value in it. So when I saw CRM tank and be down 20%, I started looking at valuation and started paying attention to it. And, and it still looks expensive to me. Now, I always talk about bad news on good companies, and maybe CRM fits that model. So it's possible it's a great opportunity to pick some up. I just, when I looked at a chart, I see room for it to continue down the 150 range before it hits some support. So I guess if I were looking to pick up CRM, I'd be looking closer to 150 or so. And then I know there were some others that got beat up pretty good, which is where I see a divergence in economies. Just like we have friends and family and everything else, that some people are doing just fine, some are really struggling, and some are getting by. I kind of feel like, you know, same with the companies. Some are struggling, some are just getting by, and some are doing really well. I mean, look at Nvidia. It's on a tear. And as a trader, it doesn't look like it's topped out yet. I mean, I know it looks expensive. I know it's moved really far. But just in terms of, I tend to look at price action more than anything else. I pay attention to the news, but the news is almost gives me indication as to whether I think a stock is going to continue or not. And I pay more attention to, is it bad news and the stock does not go lower? Because that's super important, or vice versa. Well, NVIDIA hasn't made, forgive the term, but I used to use it on the floor, what I call the orgasm. Like when I traded on the floor, a market would drift and drift and drift. It would start like slowly getting a little bit faster before all the volume came in and it just took off. Well, as much as NVIDIA keeps going higher, I haven't seen that big eruption of volume where everybody's getting in and agreeing that it just goes higher and higher, which makes me feel like it's still got room. I'm not really ready to buy more here. I have a tiny, tiny, tiny position. I kind of kicked myself because I did have a nice position that I got out in the 500s when it first had some good information. But as it's continued pushing, it's not like I've been able to hold on, and now I have such a small position, it's almost comical, but it keeps my eye on it, and I still think it feels to me like it's just gonna continue and continue until it finally has that big eruption, like you've seen, Microsoft did it, Tesla's done it, Apple's done it, and now they're more mature companies that kinda move along normally. Which brings me to another one. I mean, Tesla. I think they made a good bottom when they got around 150 or 140. I've been watching that a long time, and it finally looks like decent valuation to me. It seems like it bottomed out there. It's really filling in well around these 170 levels. And if you've watched the videos, what I love about Tesla is they own everything about their company. It's not just selling cars. They sell you the equivalent to gasoline by owning all the charging stations. They have the add-ons of the monthly subscriptions. They have, basically they sell you the insurance now, and it's way less expensive than regular insurance. I don't know if you guys know, but I've talked about I have one of them as well, and the insurance was super expensive. And I said something to the insurance agent I use, who I've used for a long time, and she was telling me that part of the reason the insurance is so expensive is Tesla set it up that if you don't use Tesla parts on any repair, that you void the warranty, so it causes the insurance to be expensive. Well, Tesla has started selling the insurance themselves, and I went from, on each car, it went from, I was paying like 6 or 7 or $800 for no, that can't be right because it was per they switched to per month. So I was paying 500 and Tesla lowered it to like 145. So it was significantly less than half the price. And then if they're making you buy all Tesla parts, well, obviously that helps their sales as well. They also sell direct to consumer. And when I think that through, I'm not sure how companies like GM or the others, I'll tell you about that in a second, Glide, both of those. Um, I don't know how the other car companies get past that. Like GM right now, the way that it works is kind of like a franchise, is the way I think of it. GM sells the cars to the dealerships who then sell to you. Well, the dealerships are a big part of the profits in terms of another layer of hands. And I'm not sure how they will be able to compete with companies like Tesla that don't have that layer involved. So Clyde is asking about my thoughts on Palantir and Bitcoin. And I'll be quick on Palantir and then I'll be a little bit long on Bitcoin. I don't know a lot about Palantir, and it could be the next best thing. And I try to stick with big and boring, and just because of the stage of life I'm at, because I have a couple of problems with companies like Palantir. I won't talk about Palantir specifically when I say that. If I invest in something that might be the next best thing, I'm not going to put a big enough investment into it that it matters too much. And if it starts going up dramatically, it's going to be really hard for me to hold on to it because I don't know enough about what they do and I don't trust the company. And I don't mean I don't trust them, but since I don't know enough about it, I don't trust myself and my understanding about it to really want to own it, if that makes sense. I might buy it as a trade, and if I'm lucky that it does well, be happy to take the money if it goes up. But if it went from 25 to exaggerate to $500, it would be really hard for me to hold it all the way. Whereas companies like Amazon or Tesla or Meta, I have no issue holding, if they 10x or 50x or some ridiculous thing, which is really hard for that mature company. But I believe in those companies enough. The other thing that I saw about Palantir is they've tripled the amount of shares outstanding, which is concerning because either they've issued it in bonuses to the board, or they've sold more stock because they think it's priced well and they're going to put more on the market to build capital, and they don't seem cash poor to really need to raise more revenue. So I don't love that they've tripled the float. Now, Bitcoin, I, this is not financial advice. I say it in all the videos, I'll say it here as well. I love Bitcoin. I am a believer. I have some Bitcoin as well. I don't know what I think about investing in it here, but I do think that it's something to have in one's portfolio. I really see the vision of it, and I like that it's not regulated by any government or company or anything like that. My bigger concern, to show how wacky I am, is my understanding is in BlackRock's ETF, there's something written in the paperwork that if they don't like a fork in the future or some change in the software, that they're allowed to build their own Bitcoin network and sell you their own Bitcoin and not necessarily buy real Bitcoin. The other thing that I wonder with those ETFs is how it's written. Do they literally have to buy Bitcoin with the money that gets put into those funds, or do they just have to have a certain percentage of it and honor the movements? Because it would seem to me the amount of money flowing in that it should be pushing the prices higher, and they haven't been going higher the way I would expect. That being said, I really believe in the network. I've listened to a lot of Michael Saylor's discussions, and boy, I get it. I see the value in that. When he talks about if you have a $100 million property in New York and you need to go, how do you you can't bring it with you. They can raise your taxes. You have to deal with headaches on it. But if you had $100 million in Bitcoin and you have your phrases memorized and you hop on a plane, you have just brought your Bitcoin with you. On top of the fact that it's that that it's not government regulated, I love. The one concern I have about it is when I look at the valuation at 1.4 trillion, if you're China or the US or anybody else, as big as that is to you and me, it's like tiny. So I don't know that it can be like a world currency, but I do see the value in what it is. I see the historical value and everything else. I really do like it. Um, I don't know that gold and silver would be a safer choice, Kevin and Billy. I'll get to yours in a second. Um, for me, and I try to diversify. I really do try to have all of it. My issue with gold and silver, and I actually have this 100-ounce silver thing. But that's part of what reminds me the issue with it is how do you bring like, don't get me wrong, it's nice to have a little, but if you needed to really move a real percentage of money with it, especially silver, it's super heavy. What are you gonna do? Put it in a bag, hop on a plane, and fly with pounds and pounds and pounds of silver? Now, if I were to guess, silver may have a really nice move just because of inflation. It finally broke above $30, and maybe there's a nice spike from there, which is why I have some. But I think it's unrealistic in terms of traveling and moving it around and everything else. And then if you have it in a safe deposit box or something like that, there's actually a cost to having it in that. But I think it's cool. Like I like that stuff, and uh, it's more the cool factor and the enjoyment that I get out of gold and silver than I would anything else. I think Bitcoin just is much stronger in terms of what it is, in terms of the ease of use. And I also envision the ability to use it. If you go into a shop and you want to buy a pack of gum, unless you have silver broken down into quarter ounces, tenths of an ounces, and everything else. It's just hard to actually use it as a currency. Whereas if you went in, you could use Bitcoin. I mean, the transaction fees currently are absurd, but you could use it at some point, especially if those transaction fees came down as a currency, and maybe they'd have something like Tether or something else that has much more reasonable um, fees to it. So let's see, Billy here. I'm retired. I only buy dividend stocks. I don't think you've missed out on some gains. I've seen some dividend stocks recently start doing really well, and I actually think going forward they probably will also. Um, when I've been looking at the economic data, it's showing that the economy is finally slowing, which is what the Fed wanted. I'm hoping sooner than later, and I think even at the next meeting, at least the rhetoric's going to get a lot friendlier to potentially a rate cut. If they start cutting rates, dividend stocks should fare rather well because what'll happen is the prices will go up, lowering the amount of the dividend. So if you're buying, I've been talking about Pfizer a lot right now. So if you have Pfizer that's paying close to a 6% dividend, but you have the risk of the stock and a secure bet of a treasury is paying close to 4.5%, maybe 5% right now. As those yields go down, so will the stock. So if the bond prices go up, yields come down because the Fed's able to cut rates, and it'll be slow. But as a 5 year is only giving, I don't know, I'm obviously making the numbers up, but as it drops from 5% return to 3.5 or 4% over the next 3 or 4 years, the same should happen to the yields on the dividend stocks because there's going to be a spread between them and the guaranteed return of a treasury, and therefore it should push the prices of those up, and I've already begun to see it happening, and I think that's part of the reason is the markets are seeing that coming, and odds are it happens before it's finished, if that makes sense. Like if the Fed's, I don't know if you guys hear that, um, but if the Fed's going to start cutting rates and you're not going to get the same yield in the bonds, the stocks are going to go up because they're going to anticipate that. So that by the time the Fed's actually cutting rates and by the time that the bonds aren't paying as much, the people who've bought, like I envision it to be a 2 year lag because a lot of people bought the 2 years because that had the best juice in them, so to speak. So if you bought a 2 year CD or a 2 year treasury and you're getting your 5%, eventually that's going to roll, and when it rolls, if that's about the time that the Feds cut the rates, and now your option is maybe 4.25, or 3.75 to 4.25, let's say, people get pretty stubborn, and they're not going to be getting the 5% they were getting before. They might start looking for alternatives, and then when they start looking for alternative stocks, they're going to have less of a selection because I'm thinking the prices are going to go up. And 3.67 return, I haven't seen your portfolio, but that's really good in terms of a balance between growth and dividend. That's kind of a sweet spot of where somebody should want to be. I tend in my own accounts to like I separate them and I get over attracted to yield in my straight dividend account. So my dividend account gets a higher yield return, but I'm probably in things that don't have the same growth potential. And there's probably a bit of a mistake there. I think you're better off in the things like Starbucks or Johnson and Johnson, even 3M and Dow that have a little bit higher of a yield, but things that still have some real potential to grow. And I don't if you I know you've been watching. I love Archer Daniel Midland here, and it only gets 3% and change. But these companies have real potential to grow versus things like, one of the ones I talk about is Virtus Infracap stock or even the JEPQ and JEPI. People don't really understand those. When you're in covered call strategies, they really don't have the upside potential that people think because those calls limit them. Um, so let's see. Uh, Cabragoon. Hopefully I pronounced it properly. May I ask the platform used, and do you separate sectors within that platform brokerage? So I have three different accounts for the most part. The platform I use for trading is just E-Trade, and I just trade on my phone. I'm not super sensitive to exact pricing right this second. Um, when I'm buying something, I'm hoping for a a week to a couple of months in terms of my trading account. My main portfolio, I actually have an account that I don't even have access to, and I can't trade online or anything else. It's through my brother is a financial planner, so I opened it up with him, and basically the rules are if I call you to sell anything, you're fired if you do it because it's got companies like Amazon and Google and Microsoft and things like that I don't want to be impacted by the ups and downs of the markets. I literally just want to own it and have them for the next 20 years, and I don't need the money anytime soon. I then keep two separate portfolios, one that's primarily a dividend account that I'll use the dividends to help cover bills and whatever else, and a separate account that I use just for trading that's a much smaller account. But since I watch the market so much and I tend to trade it anyway, I want to have access to be able to trading some things as well. Um, but I think all of them are fine. I mean, I've used SoFi as well and Fidelity. They're both really easy and similar. I haven't used Robinhood, but yeah, and Schwab too. They're all good. I don't think. Oh, good. Glad I tried. I tried. Um, but I think they're all fine. And zero commissions just floors me. When I bought my very first stock, I don't remember what it was, but it was like Coca-Cola or something that's just super boring. To buy 100 shares of that stock cost over $400. Then Schwab came around with discount trades, and I think they were $59 at the time, and that just sounded so amazing. And then there were companies like Oldie and some others that would do specials of like it was $10, but if you traded 1,000 shares, which was way beyond my means in those days, but 1,000 shares was free, I think. So it floors me that the way that they've gotten to is if you want to buy one share of a stock, it can be free at this point through pretty much all of them, which is super cool. And I think that helps encourage people to, the real goal of my channel is to encourage people to save and put money away. And I think by having no commissions, how cool is it that you can buy one share of a $20 stock and invest in it? Hi, Kevin. Doing well. I hope you're doing well also. So I love that they've gone to zero commissions and you can buy one share or something. I think that's awesome. Anyway, yeah, all of those are fine. I just use E-Trade out of habit. It's a really simple platform, but use any of them. Um, so I don't know. Anybody have any questions? Anybody see anything in the markets that they liked this week? Like I said, it was really impetuous. I don't know how many people look for live at 7 in the morning at this point, and I haven't given any notification, so I don't know if I have to market it. I just was curious how it would work out. Um, but I don't have a whole lot to yap about. Do any of you follow real estate? I mean, that's my real passion. It's just as prices have gone up, stocks have made more sense. Well, that's my favorite company, and it's my biggest position. I love Meta. I love Mark Zuckerberg. I love that he seems to be hated. Um, a lot of people don't like him, which is part of what I like about the stock. And I think it's really reasonably priced in terms of its growth, especially for those companies. So here's my thought on Meta and Mark Zuckerberg, and I might be totally off on this. When the stock collapsed, I actually picked up a bunch because what the street didn't like, forgive me, is what I really liked. My guess is he saw that, Facebook is pretty mature at this point, and he probably sees Instagram going the same route since it's a similar platform to Facebook. Um, my guess is he saw that too and wanted to continue to grow the company. Forgive me. So, what I picture with the metaverse is a guy who has a nice cash cow coming in. Cool, I'll get to those ones as well. I like those. But he has a nice cash cow coming in, and he could have turned it into a dividend stock where it just made the money it made and he paid out the dividends and everything else. But the metaverse is his push to continue to grow the company. And I love that. I think that means he's not done, that he wants to continue to grow and he has that drive in him. And what I think he sees in the metaverse, which shows how wacky my brain is, you know, think about school shootings and the security for kids and everything else. If you gave out Oculus to kids, you could do school just on an Oculus. Now, I hate the concept of the lack of socialization and everything else, but how amazing to have a few incredible teachers that hundreds of kids could be in the class or thousands of kids could potentially be in the class. Same with the Super Bowl. I envision being able to buy seats through your Oculus just like they sell them now, but the 50-yard line seats would be way cheaper because they could sell them to millions and millions of people. And then maybe the nosebleeds are super cheap. And then you'd get an advertisement around halfway through the first quarter from Domino's about getting pizza delivered at halftime, and so on and so on. So I picture his metaverse as this way that he sees as to still grow the company into an area that has huge growth potential, while Facebook and Instagram and the stuff that he currently has is already pretty well mature and maybe doesn't have the growth potential, but it's where he can get the new dividends he's giving out, and it has that cash coming in to pay for that stuff. So at least that's my thought, and I love Meta, and I like the direction they're going, and I almost think it's comical that the street doesn't like where he's investing, because the guy's proven he's done really well with visions in the past. Like, why would you want to bet against him? And every time he spends on that, that pushes the stock lower. I saw that last quarter's earnings where they actually crushed it. And what they didn't like was his spend on the metaverse. And I'm like, guys, the guy crushed his earnings. So be good with it. So I saw a couple of purchases. Let's talk about those. But I think some of you who said what you bought, I love those companies because I've bought them too. Um, I swore I saw Bristol Myers in there, which me too. I've been piling up on it. It looks like it's been getting cheap. And I saw that, basically Pfizer started going up and Bristol Myers was still making their lows. And I see them as really similar companies. So I saw it as an opportunity instead of buying more Pfizer to buy Bristol Myers and feel like I was getting in the same space, getting a good return and everything else. Um, but that was why I like Bristol Myers, and hopefully it works out. Maybe it doesn't. Again, I'm getting over attracted to yield, so maybe I shouldn't. And then Merwin with Starbucks, man, it hurt my heart to buy it, but yeah, I bought it based on everything I talk about because bad news on a great company. And what killed me is like Starbucks is a great brand, and I think the things that they're doing to try to save or continue to get sales are mistakes. Like he was talking about the CEO in the interview, and this is what I really hated about it. First of all, I thought he did a terrible job fielding the questions. There was no comfort in his answers. His answers were essentially like, the customers aren't getting our, what was he calling, our value proposition. Give me a break. Like, it's not their job to understand your value proposition. It's your job to give them value. And their thought process of using the app to give discounts, well, Starbucks was never a discount company. So to me, that hurts more than it helps. At the same time, they're a great brand. And in 15 years, which is really the timeline I want to own a company like Starbucks, this will all be history and will have passed, and they'll be doing just fine, is my best guess. Again, just my guess, not investment advice. So it shouldn't be such a big deal. And I bought some shares too. Now, it's one of my larger positions to begin with. So it really hurt me to add on, especially when I was so annoyed with their answers. I think they'd be so much better off. You know, why don't they look at adding products that fit their model already? What goes through my head is a really simple ad would be to add boba. I mean, they're popping up all over the place. It seems like a direction that a lot of the kids want to go to. They're really popular. My son, his friends, they all really like it. And it fits that coffee house vibe too. Like, there's no point in getting Red Bulls or Rock Stars, a totally different market, even though it's a caffeinated drink. But to add the boba, it's still sit down, coffee house, use your computer, get some work done type of product. So I really like that. I don't know. I hated that interview. I hated to see that same store sales were off 10%. I hated to see everything declining, and I hated to see the direction they were going to try to stop that. But bad news on a great company is an opportunity to buy. I really believe in that, and I think if you just wait them out, they tend to be okay. So that was my thought on Starbucks. I saw somebody had written, let me go see, so I give them. Was Merwin was talking about CVS. I love CVS too. It's not one I own, but I think same thing. I like it much better than Walgreens Boots. Just as an outsider, Walgreens always looks kind of sketchy and not so wonderful. CVS, they're nice stores. They're comfortable to be in. And there's one near my house, man. They've got a line out like the the drive-through is always backed up. So I don't know why they're struggling so much, and they seem out of favor. I think that it's quite possible CVS is doing just fine, and it's just the ebb and flow of a market. So I like that one too. Um, Legal in general is also one I've been looking to get more shares of. I'm not familiar with legal in general. I'll have to take a look about into it. It might be a good company. I'm not familiar with them. But as I've been getting older, I love dividends. I watch this guy, ex dividend investor. I think I really like his channel, and I think he gives good advice. He shares his portfolio openly, which I think is cool too. Here I am saying it's cool, but I'm not comfortable doing it. But I've thought about, as I'm getting closer to retirement age, even though I'm semi-retired at this point, rotating into that stuff as well, and just kind of having the dividends come in to pay the bills. I'm not ready to go that route because I don't want to give up my. I know they give a dividend at this point, but like Meta and Google, Amazon, not yet, um, and Microsoft and all those companies, because I think they're going to grow at a faster rate. So I'm really not ready to just sell them and move into dividends. But I really, when I watch his channel, it's this reminder of like, yeah, 4% dividend could pay some nice bills if you're in the right position. I've gotten to the point I started to say earlier, my real passion was kind of real estate, but the prices on real estate have gotten to the point that I, I'd rather move into a Bristol Myers because, I joke with my friend who has real estate too that Uh, Nice to see you, Lance. Oh, thanks for joining. That that if I took the money that's invested in the real estate and put it into a 4% dividend, it's not like the CEO of Pfizer is going to give me a call to let me know the air conditioner broke. And if he did, I'm a much bigger shareholder than I ever imagined. But the yields are so good and the income on the stocks are so well worth it versus the headaches of having a rental, and then the renters are usually annoying. I mean, I have one that'll bother me about a light bulb. So it's like I finally said to her, I'm like, "Look, if you wanna call because this and this, that's fine, but then we're gonna have to raise the rent when the rent is up accordingly, because it's such a pain to deal with every little issue." Like, if you can't change the light bulb and you need to call me to do it, I'll do it, but uh, I'm gonna pay a company to do it because I don't wanna be running around and doing that all the time. So, to me, dividends are great, and it's a nice way to be able to retire. You just have to keep in mind that they're not guaranteed, and they can, they can be cut or they can be lowered or anything else. Okay, it's a UK stock. That's cool. $3 per share. Wow. Um, I would just rather collect the dividends at this point. And when I watch, I'll give him another shout out. That guy, ex dividend investor. No, he's probably making 150 or $200,000 a year just off of his dividends, and he's in pretty basic Starbucks, Johnson and Johnson type of companies. So I think he has a comfort level that he's not too worried about them going out of business, and they tend to raise their dividends over time if they're good companies. So it's almost like getting a little bonus. Now, I try to wait. One of the stocks I've talked about a few times, which I'm sure I know Lance is well aware of. I try to look for opportunities, the one like Nextera Energy Partners. Now, I love Nextera Energy, which is different than Nextera Energy Partners. I wasn't very familiar with them, but my brother actually pointed it out to me because he found it. They're a subsidiary of Nextera Energy. In fact, they don't even have any employees. Their employees are just the ones of Nextera Energy. The stock had bad news, but the bad news was not so bad. They were originally estimating that their dividend would continue to grow at like 12 to 15% year over year, and they had to lower that to somewhere between 5 and 8%. Well, this plummeted the stock. I mean, the stock had already drifted from like $80 a share to maybe 50. And once that news came out, it fell from like 50 to like 20 or $21 a share, which drove the dividend yield from like 7% up to 14 or 15%, which is just absurdly high. Well, in my brain, when it drove that dividend up, if the news was accurate and they weren't going out of business and there wasn't some underlying problem going on that was a legitimate problem, what a great opportunity to pick up a stock that's paying a 15% dividend that's growing at 5 to 8% per year. So, what I like about dividend stocks is when they're out of favor for something that makes sense, and all of a sudden that dividend yield goes up a good bit, which is why I like Pfizer right now. I mean, they were doing all the COVID stuff, the stock got overpriced, it didn't make any sense. Now that they don't have it, it looks worse than it is, but they're a big behemoth that really isn't going anywhere. And to get big and boring paying a 6% yield, I mean, that's a really good yield. Same with Bristol Myers. I think the health sector just kind of got out of favor because Nvidia and everybody else is in the news, and nobody really cares about boring old dividend stocks. Um, Hey Kevin, I'm not. I'll look at Franklin Resources. I have a small bucket of things I'm pretty familiar about. I don't know too many others. I mean, I know the basic ones, and I know some of the others. And I'm sure Nextera isn't a hugely one. Um, I think ETFs are great, Merwin, if you want to have a set it and forget it type of thing. I don't love them for me, so I don't want that heard the wrong way. I think if you don't love watching the markets all the time and you don't want to pick, that they're a great alternative to diversify and have a nice, well-rounded portfolio. For me personally, I don't want to be so diversified. I've been working harder about hyper focusing on the companies that I think are the greatest companies. I actually want to get my portfolio, my main one, down to less than 20 stocks, and if anything, I want to have it to 10 to 15 because I think that gives me the best opportunity to outperform. And my goal is to grow and outperform more than just keeping up with the market. But if you're not wanting to watch the markets and you just want to be well diversified, having two or three ETFs really does that. I mean, if you own the spiders and the Qs, I'm not sure that you need much more than that, or unless you want like dividend return too, and then the SCHD or some of those other ones. Like they do a great job of doing it with really low fees. I mean, they're not mutual funds used to have higher fees. ETFs barely charge anything. So I think they're great. They're just not great for me, if that makes sense. And then Dan, the ticker symbol for there's so Nextera Energy is NEE. I think they are a great company. They're the largest energy company. They're out of Florida. They do a mix of like regular traditional energy, like like coal and everything else. But then they also the Nextera Energy Partners, yeah, SCHD, Nextera Energy Partners, which is NEP, is their subsidiary that it used to be solar, wind, and gas pipelines, but they sold the gas pipelines to Kinder Morgan so that they could just focus on renewable. Um, and their contracts are direct with Nextera Energy. So what was so cool, and part of why I really felt more comfortable, forgive me, with the company. And I do this with a lot of companies, mainly to see who responds and who doesn't. But I sent Nextera Energy Partners an email saying, I'm an investor. I'm a little bit concerned with the way the stocks performed. Um, I have a decent position, blah, blah, blah. They responded the next day. Not only did they respond the next day, they set up a Zoom call like a few days later where a guy who seemed legitimately well versed in what's going on with the company had that conversation with me. Like, I was really impressed with how organized they were, how responsive they were, and then basically what he told me is their contracts are set in place through 2027 already. So he couldn't give any forward guidance past 2027, but he was really comfortable with what they were projecting through then because those contracts are already in place with Nextera Energy. And depending on what interest rates do over the next few years, and. But my God, I've emailed Starbucks, I've emailed Pfizer, like almost none of them even respond. I even did it with Portillo's thinking they're a small enough company I'd expect to hear from them. The fact that Nextera responded and is that organized and that well run made me feel that much more comfortable with the company. So I like Nextera Energy, which is NEE, and I like NEP, which is Nextera Energy Partners, because of the yield it gives. So, right, Lance? I mean, I was floored. How organized, and they're a huge company. How well run do they have to be to actually respond to some stockholder bugging them outside of quarterly earnings? I mean, Starbucks is kind of an ego. Like, I've done it with Zillow too. I mean, I think that whole NAR settlement creates a great opportunity for Zillow. So, them selling off on that news is like idiotic to me. Like, if somebody there doesn't see the vision of what that actually does for them, there are a bunch of bozos that are hyper focused on what they're currently doing in terms of selling advertising to realtors that they're concerned aren't going to be making the commissions anymore, which will impact what they'll pay for the advertising and versus picking up market share and hiring people to manage all that stuff. Like I think it creates a great opportunity for them. But none of those companies responded, which is what I expect, but I would be that much more impressed if they were that well organized to be able to handle that stuff. Portillo's kind of bugged me because I love Portillo's, and it really bummed me because I think they're small enough that they should be able to respond, and where they're at this growth phase, they should be that organized. Um, Do I think day trading is a gamble? Of course it is. I still do it, and I am barely profitable in it, which is why I have the 3 accounts. The account I do the best in is the one I just leave alone. My dividend one is doing incredibly well right now, but that's why I think that that they're seeing that transition of Fed funds, and they're seeing that bonds are probably gonna pay less, which is why I think that the dividend stocks are beginning to have a little bit of life to them. I think they've been out of favor so long, and I do think that getting a decent yield by the time that yields come down in bonds, that odds are you won't be getting the great dividends in a lot of the dividend stocks. Now keep in mind, even when rates were low, there were dividend stocks that paid really good dividends. But when you get into the ones that are high paying dividends, like a Altria or something, by the time rates come down, my guess is a high paying dividend will be 6 or 7%, not 8, 9, or 10, or British Tobacco or some of the other sin stocks. The bummer to me with one like Exxon is they've pushed towards going stock buybacks instead of raising the dividends. As somebody who owns the company, I would rather them go to continue to raise the dividends. I like that way of doing things. I'll have to check Nextara too, NXST. All right, for sure. So anyway, let's see. Anybody have any other questions before I probably call it a day? I see my wife beginning to move around in the kitchen. It's probably time that I get moving too and say good morning. The dog's also poking me because he wants to get fed. Um, I do like Target more than Walmart. Yeah, for sure. Well, so here's why I'm just off to hang out with the wife and say good morning to her. The reason I like Target more than Walmart is they have better growth and their numbers look much better, and Walmart's priced higher in terms of what they're making. It doesn't make sense. Like Walmart's at a higher PE, but Target's got a higher growth rate. So that's why I like Target. That's the real basics. Otherwise, I see them pretty similar. Like they're both retail. It doesn't matter to me if I actually like one store or another better or worse. It's more that I see them, you know, I think they're going to continue to grow quicker, is what it is. That's why I like Target. I think their direction's a little bit better too. And it's more that I saw that especially when they were down below $110 a share, they were so oversold over that stupid wokeness stuff and their political views and things like stuff that stuff passes. It's the same as when Chipotle was having the problem with the food and things like that. So, all right, guys. Well, thanks. I appreciate the kind words. Thank you so much. That's super cool. Anyway, I'm gonna figure out how to hit stop, and I'll probably try this again. Forgive me. It probably won't be. We're going for a very long trip. I will be posting videos while we're gone, but I won't likely have a chance to do live again. But when I get back, I really hope to do more of the live stuff. I'll probably aim to do it either on a Saturday or a Sunday and try to stick with doing it once a week. And I appreciate you guys as well. So let me figure this out and have a great day. Where do we hit stop? Go Portillo's for sure. Oh, here we go.